Felix, how do we invest around the noise, the geopolitical noise, whether it's Korea, whether it's Italy, whether it's Germany, whether it's Brexit? There's a lot of it. How do we make money within this environment?
Well, it really means that money is flowing out of the European continent. You have a balance of payment problem in the southern states, and obviously Germany has to swallow all that and finance all that. And the world is coming to grips and understanding that eventually the Eurozone as a total is falling into a balance of payment crisis where money flows out. They can afford it because they run a large current account surplus due to Germany. But basically the euro will continue to weaken further. And capital will flee the European markets, and that's why I think the European equity markets will continue to remain underperformers relative to the US.
Yeah, and what about the bond market? We saw the blow up in peripheral yields when we had the Italian crisis, whatever you want to call it, ahead of the formation of the populist government. Have we seen the worst of that, or could we see a further blow up in peripheral yields in coming months?
Well, the global bond market is in a secular bottoming process that is a multi-year bottoming process, and the European bond markets are the most inflated part of that bond market, and therefore they are most vulnerable to all of that. And when you have a balance of payment crisis in one country and the political situation changing and pushing for change and more debt, then obviously there is a reflection in the interest rate and the level of bond yields, and that's what we had. I think Italian bond yields will eventually go much higher. At 4%, the total equity of the banking industry is eaten up because they own so much bonds. So that's the risk and the fear the markets see, and that's why they are, whenever bond yields go up in Italy, they sell off Italian stocks. Because it really limits the capacity of the banking industry to make loans. That's the big problem.